Hi everyone, this is Shrishti here, and we are going to take up the topic related to bank merger. So, as you all must be aware, that this is a very important issue that has been lurking around for quite some time now. The government has recently announced a bank merger, to merge the public sector banks into four large units. So, we are going to just have a wholesome view of what this topic means to us. Just in case you're preparing for any competitive exams, you will know that this topic is very important and it is very necessary for you to analyze all its pros and cons and to form a decision about the topic that is in news. So let's just begin and let's have an all round view about it. So, what is this merger of banks basically? Now, in the introduction, I would just like to tell you that the Finance Minister of India, who is Nirmala Sitharaman, she has outlined the government's plan to merge 10 public sector banks into four large banks. Okay, so here, what is the plan? That the 10 public sector banks of our economy would be merged and they would now create four big entities. That is, we would lose six of our previous banks and they would be merged into four large units. Okay, so after this merger, what can we expect? We had 27 banks in the past. Now we would just be having 12 public sector banks. Okay, so after this merger, including all the other public sector banks that we would have a total of 12 public sector banks in our economy, which includes the State Bank of India and the Bank of Baroda. Now, why have I mentioned the State Bank of India and the Bank of Baroda? Because these two are the banks that have undergone merger in the past years. Okay, in just a few years back, if you see, though, the State Bank of India and the Bank of Baroda, they have also undergone merger. Now, what is this merger expected to do? So, it's expected to create fewer and stronger global sized banks to boost the economic growth. So the reason that is being put forward for this merger is that they want to cut down on the lower units. They want to cut down on the smallest units that we possess in the economy, and they want to create bigger global sized banks that can compete at the international level and also mark greater national presence. Okay, so now before we begin, we need to have a look at which are the banks that have been decided to be merged. So the Oriental Bank of Commerce and the United Bank would be merged with the Punjab National Bank. The Syndicate Bank would be merged to the Canara Bank. Andhra and Corporation Bank would be merged into the Union Bank of India, and as for Allahabad Bank, it would be merged into the Indian Bank. So these are the banks. Now you can see 2, 3, 4, 5, and 6. We are losing 6 of our banks because our 10 PSBs are being converted into 4 PSBs, right? So mergers, now is this a new concept, guys? If you just talk about merger, so is it a new concept that we have been bringing out of late? No, it is not so. So in order to know this, we need to have a historical background of the same. Now these mergers, they had begun during 1960s itself. Okay, what was done basically, that we had so many smaller weaker banks that were not able to run profitably. So in order to bail them out, they were merged with stronger banks so that customer interests plus the economy interests could be protected. Okay, now post liberalization period, if we talk about, which is the period after 1991, if you are aware of the history of Indian economy, you will know that 1991 was the era where liberalization began. Before that, we were more of a closed economy because we had been troubled by the British for quite a long time, and because of which our traditional industries had literally died out. Okay, so in order to protect that, the initial government had moved towards a closed economy, whereby it did not want to interact much with the outside economy because it wanted to build a stronger economy of its own, right? But during 1991, because of the balance of payment crisis, what we had to do was to open up our economy, right, as suggested by the IMF and all, because we had taken loans from them. So we'll not get into more of that, but then just to give you a background, that in the post liberalization period also, we continued with the quest to build banks which are at par with the global standards. Okay, you wanted to build a bank which is as good as a global bank, right? So in the post liberalization period also, this problem and this issue had been continuing. Now this is all about the merger, its background, which banks are going to be merged. Okay, why has it been decided? Because the four key decisions that have actually been taken are to merge these banks. Okay, to infuse equity or capital, you could say around 55,000 crore approximately is going to be infused into the public sector banks as decided by the government of India. And next, they have also spoken about governance reforms, whereby they want to, go for chief risk officers, they want to change the structure of the board committees, etc. Okay, so all of this have been decided. Now post merger, what can you expect? What do you see post merger? What is the status like of the public sector banks? So post merger, you would have 12 public sector banks in India. Now I have mentioned them in order of their scale of operations, that is from the largest to the smallest. Okay, so SBI would be your largest bank, followed by Punjab National Bank. Then you have the Bank of Baroda, thereafter Canara Bank, Union Bank, Bank of India, Indian Bank, followed by the Central Bank of India, Indian Overseas Bank, UCO Bank, Bank of Maharashtra, and Punjab and Sindh Bank. So this is how they would be categorized from the from the bank having the largest operations to the one having the minimal operations. So these are your 12 public sector banks, and you need to be aware of all of this in order to formulate a better idea as to why this is happening. See, if you're to just evaluate on certain opinions that have been taken, you need to have a background of the topic, right? So that is why I have put all these details for you. You can just have a look at this, and then you can form a whole round view as to why this merger was required, what could have been avoided, what more needs to be done. Okay, now what are the committees that have been related to bank mergers in the past? So in the past, we have seen one committee, M Narasimham committee, which has recommended merging of banks as back as in the 1990s. So this M Narasimham, he was the former RBI governor, and he had also recommended for the merging of banks during 1990s, because we had a lot of weaker banks that were running on losses, and so in order to boost up the economy, in order to prevent such losses, this had been recommended. Similarly, in 2014 also, PJ Nayak committee. Okay, if you have heard about it, then PJ Nayak committee is also associated to the banking sector. He had also suggested that the government either merge or privatize the state owned banks, right? Because we had so many state owned banks, and government's job is manifold, right? You cannot just concentrate on one sector, and banking is something very major. It can actually topple or shape your economy. So because of that, it has also been suggested at times that to reduce the role of government in all of this and privatize this bank, so that they could run with the motive of maximization of profits, and thereby they could save themselves out of this non-performing assets, bad loans, all of this which we are seeing. Thereafter, we also had an alternative mechanism which has been led by Mr. Arun Jaitley. Okay, he had also recommended the merging of Bank of Baroda with Vijaya and Dena banks. So while we were merging the Bank of Baroda, which has happened in the past, this was suggested by Mr. Arun Jaitley. He had given a go ahead for this merger. Now let us look at some of the other mergers that have happened in the past. So as for SBI, if we talk about the State Bank of Hyderabad, Patiala, State Bank of Travancore, State Bank of Mysore, State Bank of Bikaner and Jaipur, and the Bharatiya Mahila Bank are some of the associates that had been merged into this Anchor Bank. Now, what is Anchor Bank? Into which the entities they get merged. ठीक है, अगर कोई एक bank है within which two of the banks are coming within it after the merger, then the bank that is amalgamating two other banks or any other units, for example, then that unit is said to be the anchor unit. So SBI is the anchor bank in this case, and all these are its affiliates which had been merged into the SBI. Another recent merger that we had seen was that of Bank of Baroda, whereby the Vijaya Bank and the Dena Bank, they had been merged within the Bank of Baroda, and now only the Bank of Baroda exists. Okay, so these are some of the mergers that we have seen in the recent past. Now, what are the reasons for merger, guys? We have discussed about this issue that has been taken up what will be the status post merger, which are the other mergers that have happened recently. But what is the reason why do we opt for a scheme of merger or amalgamation? So see, the first and foremost being, you want to protect your weak units from loss. Okay, so what is currently happening is that we have so many small units, but because of various structural issues, various bottlenecks associated to them, they are unable to function profitably. So now what government has decided, that instead of keeping so many units and governing all of them separately, what we can do is probably we can merge them into the units that are already successful. That will reduce a lot of operational burden. It will reduce the burden on the government as well, and it will protect the weaker PSBs from loss, because they will merge into the stronger units, and then thereby they can get benefited of the stronger policies, of the stronger technologies, etc. Okay, second, creating diverse portfolios to lessen chances of failure. Now when you have larger entities, your portfolios would also be created in a diverse manner. What happens in smaller entities is that they are unable to provide you various goods and services, I would not say, a lot of services are missed out. Okay, because they are unable to provide you that, they cannot create massive portfolios. But if you have three banks that are coming together, you can combine the best of all of each, and then you can create much more diverse portfolios. So even if you happen to fail on one front, you will definitely be doing well on the other fronts. This can be at least expected. Okay, so diverse portfolio will reduce your risk. What do we generally do when we invest, guys? We do not invest in one single slot. Okay, if you have gone for investment options, you will know that the fund managers, they exist to look at the market and they diversify your portfolio into various units. They don't just purchase a single quantity of stuff for you. What they do is they diversify, so that just in case there is one single failure in one sector of the market or one segment, the other segment will compensate for that failure. Okay, third being economies of scale. Now this terminology is very important. If you're not an economics student, then I'll just put it in layman terms, that economies of scale, what does it mean? It means that if you operate on a larger scale, okay, if a smaller unit starts operating on a larger scale, what is seen in economy is that its cost of production will definitely decrease. Okay, so if you're operating on a lower scale, suppose you're operating at quantity q1. Okay, I cannot plot it on graph because I do not have the marker access as of now. I'm really sorry about that, but then let me just explain you that if you have a smaller quantity being produced, and suppose your cost for the entire production is rupees 50. Okay, they say that if your quantity production increase for suppose 15 quantities, suppose you're producing 10 quantities for rupees 50, if you go on to produce 20 quantities, your cost will definitely come down to somewhere around 45, or at least lesser than 50. So that is what is meant by economies of scale. Now this concept applies here. You know how do you say that? Because now you have, suppose you have 10 public sector banks. Okay, they are costing, like they have different rents to give, they have different operational costs, they have cost related to keeping their employees and all of that. Okay, so once you combine this, once you restructure them and reduce them to 4 units, what will happen is that your cost of production will go down, and thereby you will enjoy the economy of scale. Okay, so this is another thing. Twin balance sheet crisis can be checked. So twin balance sheet crisis is when the banks and the corporates, both of them, they are suffering and they are unable to pay the loans. Okay, unable to reap profit. So this can be solved. Non-performing assets, that is when your assets are not giving you the returns. Okay, second, and the other point is serve the needs of a $5 trillion economy by 2025. So this has also been mentioned, that in order to cater, or in order to fulfill our wish to cater to a $5 trillion economy by 2025, we need to undergo this step, so that we have large banks which can cater to greater demands and give fund better projects and all of that. Global clout. Now we do not have any banks in India that match the international standards. Okay, so they want to create large sized banks that can compete globally. Stagnant economic growth. Besides, we all know that India is under recession. Okay, we are having a very tough time economically. So because of that stagnancy also, it has been decided by the government that banks are a major area where the government has been infusing a lot of money in the past, but to no good. Okay, there has not been return in the same manner like the, in fact, they have been just trying to pull off the banks from loss making units to something better. But because of all of this, the government is not able to focus on increasing the economic growth. So all of these are the reasons why we have opted for merger. Now pros that also mean advantages. So what are the advantages of this merger? What are the advantages we can expect rather? So as for the, see, this is a wholesome view, because if you are merging the banks, it's not just a bank issue. It relates to the bank, it relates to the government, it also has a fall on upon your economy. So we'll look at advantages from each sector's perspective. Now as for the banks, compete with international standards. So I have kept repeating it, that if you have large sized banks, you can compete on a global level, because currently India lacks something as big as as big as any other bank which are there internationally. So in order to compete on that level, in order to, so we need to increase, we need to have much more large sized banks and cut down on the smaller banks we have. Next generation banks, this has also been spoken of in order to justify this merger, that we aim to create next generation banks which will cater to the demands that are being catered internationally. Okay, offer greater diversity of products and services, that I have already told you. Since all of you would unite, three good entities would unite, they will offer greater diversity of products, reduce unhealthy competition. So now currently what is happening is, since you have so many units, each of them are competing with each other, right? There is a lot of unhealthy competition that exists even amongst the banks. So that would be reduced once this merger takes place. Greater recognition and higher ratings globally. Now if you compete at international standards, if you actually achieve your dream of being next generation banks, then this will automatically follow. Okay, stronger national presence can also be seen from the bank's perspective. Larger balance sheets, because balance sheets of two or three banks would combine, and then you would have a greater area or greater fund available at your discretion. Cost of lending would decrease. Okay, wide disparities between bank would come down. So currently there are a lot of disparities in terms of wage, you can see, in terms of service conditions, you can see. So all of this would come down. Higher professional standards would also be met. Okay, so this is about when it comes to the banks, these are the advantages the banks can expect. Okay, for the economy, what are the advantages? So reduced cost of operation. Now see, if you have a lot of smaller banks operating in different areas, you have a lot of operational cost that is associated with it. A lot of cost is also gone into paying the salary of high level staff which you have in all of these banks. So all this would decrease and the economy's burden would reduce, because the cost of operation would come down. Better liquidity management, because you have more funds at your discretion, your cost of lending is also low. Now since you have more funds at your discretion, the government is also planning to infuse equity, so you will have a lot of funds at your disposal to maintain liquidity. Okay, synergy in operations, so greater savings. Now when you merge some entities, why do we do it? For better coordination, for better synergy. Okay, so if the synergy increases, then you can also increase your savings. Branch and staff rationalization. Now branches would come down. Okay, number of branches operating in different areas would come down, so a lot of staff would also be overstaffing that we see would come down. So all those rationalization will again in turn help the economy. Better risk management. Okay, this is very genuine. Now, for the government, recapitalization burden would decrease. See, the government has planned to infuse equity, but that is for a single go. But now, currently, what is happening, that if we are operating at this structure, whereby we are not creating the merger, the government is continuously recapitalizing them. Currently it is going on infusing capital within them, but to no benefit. Okay, so the recapitalization burden would come down for the government. Basel 3 norms could be better implemented. Now if you talk about the Basel 3 norms, you can always have a question in your prelims as well, that what are the Basel 3 norms related to. So these are spoken to of in context of banking sector. Now Basel 3 norms, they talk about some capital adequacy requirements that need to be met by the banks. So if you have larger banks, they can comply to these norms much more easily. Smaller banks find it difficult to adhere to the capital adequacy norms because they do not have enough at their disposal so as to meet such requirements. So if you have larger sector banks, they can probably get this done in a better manner. Third and fourth thing, which are related to each other for the government: easier to monitor and control plus good governance. See, if their burden decreases, if they have to just look at 4 units instead of 10 units on a different like having different policies, having different management, all of that, then it's easier for them to monitor and control, plus they can keep simplified and standardized policies, and that can probably lead to good governance structure for them. Okay, so these are some of the pros that we see when we talk about the merger. As for the cons or the challenges or the disadvantages, so see, problems to adjust top leadership and institutions, difficulty in adapting to new culture, etc. So now if you move even from one private sector company to another private sector company, if you have worked somewhere for quite some long time, you will find it difficult to adapt to the new culture within a new organization. Okay, so that becomes of utmost concern when we are carrying out this merger, that how will people be affected, how will your human resource be affected when they are asked to shift from their old norms. Okay, traditionally they have been doing something for quite a long time, now they have to just move out of their comfort zone and adjust to some new environment that you have created for them. So that can prove to be a very big challenge. Second is to problem to adjust top leadership and institutions. Yes, this is also absolutely correct, because currently if you have 10 units, you will have different managerial structure, different managers, different general managers, different CEOs, etc. Okay, who belong to high top level managerial positions. Now when you are cutting down the entities and you're bringing them to a smaller number, then you cannot adjust all of the top leadership, right? You have to take out only the best of the top leadership, and some of them you will have to adjust in some different manner. So this will also create some kind of haywire situation. Okay, shifting closure of many ATMs branches. Now this is quite obvious. If you're cutting down on the number of main units or main branches, then the branches that fall under them, a lot of ATMs that they have, that will also close down, right? Because you will have to reduce your cost of operations, and since now you are becoming or merging into a single entity, you will have to maintain your branches, you will have to maintain other operations that come along with it according to just one main branch. You do not have to cater to the other branches, so automatically the number of branches would come down, and that would also affect a lot of customers that you have, right? Because regional imbalances would be there. See, right now if you have 10 banks, the smaller banks, what they tend to do, they tend to go into smaller areas, they tend to go in regional areas. But when you merge them into big powerful banks, then the regional control is lost. Okay, you just have the banks focusing on the greater urban centers, you do not have banks at a regional level, so a lot of regional imbalances can also be caused. Monopolistic behavior with increased market power. So now what is monopoly, guys? Monopoly is when one person or one seller enjoys a lot of customers. Okay, there is hardly any competition that exists. So here, although you do not have a single person who is the monopoly, but it's a kind of oligopoly, but this can tend to increase your monopolistic. So when you know that you're strong enough to affect the market, then what can be done? When you know that there are a lot of the competition has been decreased, you and some other banks are the sole banks in the entire economy, then what that could lead to, that could lead to some monopolistic behavior coming from your end. Okay, worsen the unemployment situation further. I don't think I'll have to elaborate on this, because a lot of strikes are also going to come up because of this. Okay, and in fact coming up. So many of the employees, they are against this move of the government, because so many of them are going to lose jobs. Plus even the future candidates, they feel this thing that less jobs would be created now. So all of this is creating a lot of ruckus in between the population. Okay, big jolt to the economy if a big bank crumbles. So this is another major issue. Too big to fail, you must have heard of this term. So in 2008, Lehman Brothers is a big example for us. Okay, in the USA, when this Lehman Brothers, they had failed, then the entire economy had undergone a severe recession. Okay, so now if we are creating such kind of bigger banks, what will happen is that although the shock absorbing capacity will increase for once, but in the longer term, if there is anything affecting the economy, they will be greatly or much adversely affected. And if they fail, then the economy will get a bigger jolt. See, if you're having the small banks failing or not performing profitably, at least you have the bigger banks to take care, right? But if you merge them and if you create one large unit and something is to go wrong with that large unit, then who do you think will come to rescue? So that kind, if you look at it that way, then it's a big jolt to the economy if that big bank is not performing the way it was expected to perform when the merger was carried out. Okay, so these are some of the pros and the cons that we have discussed. A lot of things that you can analyze from your end also, guys. Okay, because this is a wide end topic, we cannot discuss each pointer. You might come across some ideas, you might look at some other examples and see that what else can be included. But I have just tried to give you an all round view, because when you speak of competitive exams, you cannot say that okay, is merger good or bad? You cannot answer it in yes or no, right? You need to know both, how it is going to be good for the economy, and second, you also need to know that what are the disadvantages, what are the challenges, and last but not the least, you need to know the way out, that at present, despite the pros and cons, after analyzing both of them, what can probably be done so that this is affected smoothly. So what is the way out? Ensure smoothness of merger. Now since you have decided to go for the merger, please see that the least people are affected by it. Okay, as the government has promised that none of them would lose jobs, but do you think that can happen? If none of them would lose jobs, then again there would arise the problem of overstaffing, disguised unemployment, right? As we see in the agriculture, that you would not require so many people, but just to provide unemployment, just to provide employment, if you keep them, that means they are not adding to your productivity. Okay, their contribution to the work is zero, their contribution to the output is zero. So you need to ensure the smoothness of merger, you need to find good ways of allocating certain jobs to them. Okay, and then you need to ensure that the merger is carried out in the desired manner. Avoid overstaffing, as I already told you. Now Mr. Raghuram Rajan, in the past, when there was a discussion on merger, he had decided, like, he had also told that you can probably privatize one or two big size banks. Okay, you can privatize one or two of them, so you will get one model based on how they are operating. Second, what you can do, that some of the banks which you already have, you can carry out governance reforms. Okay, so in 2 3 manner you can check the performance of the banks after following 3 different cases. So this can probably be done. Bring out governance reforms to address structural issues. So currently there are a lot of structural issues along with the board committees. Okay, a lot of discussion has been taking place for that as well. So all of this can be synergized, all of this needs to be kept in mind. Only going ahead with the merger is not a solution, but how to ensure its success, that is what is most important for us. So with this we finish the merger topic, and I hope I have made myself clear. Thank you so much, guys, for your time, and looking forward to meet you in the future. Thank you. Bye bye.